Finance is the cornerstone of human civilization, encompassing resource management by individuals, businesses, and governments to maximize return and growth. It spans personal finance, such as budgeting, saving, and investing. It also has corporate finance, such as resource creation and shareholder value, and public finance. It also has taxation, economic stabilization, and social welfare. A robust financial system enables fund flow between savers and borrowers, fostering economic growth and resilience. NFS AMG Trading, established in 2017 and previously known as Rafi Brothers, is operated in retail and wholesale at competitive price in Perlis, Kanga. Owned by Encik Syahrudi Abidin, age 47, and the company is located at Batu 1, Lot 73, Jalan Raja Said Syafi, Kanga, Perlis, and is renowned for its affordability and widespread reputation in the region.
The company lacks sufficient current asset to meet short-term obligation and is overly depend on inventory, which is not easily converted into cash. This weakness cash flow management and increased vulnerability to operational disruption. To improve financial stability, remain competitive, the company must receive its liquidity management, strengthen cash flow, and reduce reliance on inventory as financial buffer.
I will proceed the next point in this problem statement, which is increased production costs. It refers to the increase in expenses required to produce a product or provide a service. This is one of the main challenges that can affect the profit margin and thus the competitiveness of a business. For the owners of NFS AMG Trading, they face problems due to the current economy, such as an increase in the cost of goods, inflation, and others. One of the problems they experience is due to current inflation rates, so it must be rectified. The clients may have the following recommendations at hand, either to cut down their product quantity or to get substitution products. This step is taken to avoid sudden price increases and cause them to lose customers. Another point is there is a lot of competition nowadays. For a trader, many shops have been opened in their area of operation, so with that, they need to always be aware of their surroundings. These business owners always do promotions such as cheap sales and year-end sales to increase their sales. The owner of NFS AMG Trading will ensure that the items sold in their shop are always at an affordable price. So thus, most customers will choose their store over other stores.
Now I will present the financial performance of NFS AMG Trading Company. I'm going to analyze on two main categories of financial ratios, which is liquidity ratios and efficiency ratios. Let's begin with the liquidity ratios. The current ratio of NFS AMG Trading is 1.69 times, indicating that we have Ringgit Malaysia 1.69 in current asset for every Ringgit Malaysia 1 current liabilities. This is a positive sign showing that the company is in a comfortable position to cover its short-term debts. However, the quick ratio is in lower at 0.77 times, which excludes inventory from assets. This shows unsatisfactory level of fulfilled business obligations. This suggests we heavily rely on inventory to meet short-term obligations. Now, let's analyze the efficiency ratios. Our inventory turnover ratio is 2.5 times, indicating slow inventory movement. The average collection period for NFS AMG Trading is 40.8 days, which is 41 days. It is moderate but could be improved. The total asset turnover ratio is 0.789 times, meaning the company generates 0.79 times in sales for every Ringgit Malaysia 1 invested in total assets. This indicates the underutilization of assets, suggesting room for improvement in asset management and efficiency, while the fixed asset turnover ratio of 1.88 times shows the effective use of fixed assets. The investment in fixed assets shows a higher efficiency compared to industry average. This is reasonable. Optimizing fixed asset usage can further enhance profitability. Lastly, the account receivable turnover ratio for NFS AMG Trading is 8.82 times per annum, highlighting efficient receivable management.
And I'm going to present about analysis of leverage ratio. So our debt ratio is 42.11%, showing a balanced approach to debt financing. So the next one is debt to equity ratio of 0.73, indicate conservative leverage, which minimize financial risk. So the next one is the equity multiplier of 1.73, show significant reliance on equity financing, while the long-term debt to capitalization ratio at 12% reflect limited long-term debt usage. So finally, the return on interest ratio is 3.17, indicate we are earning more than 3 times of interest expense. So now we are moving to profitability ratios. We see strong performance across the board. The gross profit margin is 47.06%, 73%, showing an effective cost management. So now next operating profit margin stand 38.73% and the net profit margin at 24.67%, reflecting healthy profitability. So additionally, our return on asset is 19.47% and return on equity is impressive 33.64%. So in conclusion, our analysis highlight strong profitability, effective leverage management, and good utilization of fixed asset. So however, there are areas for improvement, especially in equity, inventory management, and overall asset utilization. This is our balance sheet statement and income statement of 2023. Now I will be presenting trend analysis of company net profit from 2021 to 2023. Over the 3 years, the company show a strong and positive net profit trend.
Improve liquidity management, offer early payment discount to customers, longer credit terms with suppliers, implement effective inventory control, establish an emergency fund, explore short-term financing options, enhance operational efficiency, implement demand forecasting to optimize inventory, automate payment, reminder and strengthen credit control, identify and repurpose non-essential assets. Third, control costs, collaborate with logistic companies to minimize transportation costs, bulk purchases with suppliers, explore alternative and more cost-effective sourcing options.
Another recommendation for this company is to gain a competitive advantage. We can implement customer loyalty programs, offer unique products, and expand through e-commerce and social media. For debt and financing, we should reduce short-term liabilities and explore equity financing. This step will strengthen our finances, improve efficiency, and drive sustainable growth.
NFS AMG Trading faces challenges with liquidity, operational inefficiency, and rising production costs despite strong profitability. To address this issue, the company should improve liquidity management, optimize inventory strategies, diversify payment options, and reduce short-term liabilities. Strengthening its online presence, implementing customer loyalty initiative, and exploring equity financing are recommended to enhance competitiveness and financial stability, positioning the company for sustainable growth.